Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. We had retail sales come out stronger than expectations today. The producer price data was, and raw material price data was a little bit weaker than expected. But so we did see the market initially react to the stronger retail sales, sending the dollar Canada to the downside, the Canadian dollar higher. But since then, we have seen a rebound back to the upside. So what does it look like tactically as we head toward the weekend? Go through that in this video, so let's get started. Well, starting on a Wednesday, the price action started to get really volatile in the dollar versus Canada. Why? Because we had the U.S. Federal Reserve interest rate decision, which caused schism in the market. The initial move to the downside in the U.S. dollar after 50 basis point cut, that price move to the downside did find support right against the 100 bar moving average on the 4-hour chart. There was some history of support against that level right through here and here. So coming back down to that level gave the buyers the go ahead to push to the upside, or after it held that level, it gave the buyers the go ahead to push back to the upside. And lo and behold, on trading yesterday, the price continued its move to the upside. And this time we got above the 38.2% retracement of the move down from way back here down to the August low right here. That 38.2 came in at 136.33, but then the momentum on that break failed quickly, and boom, right back down to the downside. And this time we fell back below, fell below the 100 bar moving average here, and that failed. So we had a failure on the top side and a failure on the downside in the dollar versus Canada trading just in yesterday's trade, separated by just hours of up and down price action. What was interesting was that the price did hold support later in the day against the 100 bar moving average, and we did see rotation back to the upside and trading here today after breaking lower after the retail sales data and getting back below that 100 bar moving average, making for the second failed attempt below that in trading this week. The price then rotated back to the upside, but where do we find resistant sellers, or where are we finding resistant sellers? Right near these two moving averages right here. We also have the 200-day moving average right here and the 200 bar moving average on the 4-hour chart. These are the hourly moving averages, by the way. The 100 and 200-hour moving averages, both of them are converged right at the same level. Why? Because of the up and down price action we've seen over this period right through here. So we're at sort of a barometer for both the buyers and sellers in the dollar versus Canada. Move above those those two hourly moving averages, move above the 200-day moving average, move above the 200 bar moving average on the 4-hour chart, and the bias shifts more to the upside with work to do. That work to do would be this swing area up here, and then getting back above the 38.2% retracement as well. So that's the upside roadmap for this pair. Now, sellers could also look to lean against this cluster of moving averages. Why? Because, well, risk can be defined and limited against the levels. If you were to sell against these two moving averages, what you want to see is a price to, yes, once again, get below the 100 bar moving average at 1.3550. I know it failed over the last 2 trading days below that level, but I know it also held support against it going back over here, here, and here. So there, 6 of one, half a dozen the other. What you have to do as a trader is hope that when you get these breaks, that it continues in the direction of the break and doesn't get these failures. But if it does fail, you get out. So you lose a little to potentially make more than a little if the price should go further to the downside, like down to here. So that's my technical look at the dollar versus Canada. You can sit there and argue fundamentals that the Canadian economy is weak, with unemployment high and inflation coming down. We saw that again in the producer price data today. But then again, you throw that retail sales in there and throws a wrench in the system, and then you got the U.S. dollar side of the whole equation where the market's trying to figure out, I don't know, is the Fed going to continue its tight or easing like it did with the 50 basis point cut, or was that just a kickstart to get things going, and things are going to slow down and be more on pace with the Bank of Canada? We will see, but the price action is going to tell the story. So watch the price action. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.